morning, good afternoon. Happy Friday, TGIF. How are you doing, Jimmy? Hey, Neymar. Hey, Ju Marinas. Hey, Augusto. Hope you're all well. I guess, yep, everything's streaming okay. You can see me okay, hear me all right. Put it into the chat and let me know. Oops, I got that one up. Okay, good. Alrighty. Are we good to go? Let's give it a minute before we get started. In the meantime, you can help me out massively by remembering to click that like and subscribe button. Thanks for that, Jimmy. How did you all go for the ECB interest rate decision from yesterday? Do let me know. Do let me know. I didn't do anything at all. It just bounced around, so I didn't get into any trades. So let me know how you went, if you did get into any trades. And if you're new to the session, do drop a message and say hi. Let us know where you're joining us from. And as usual, all the regulars, a big welcome back. Thank you again for joining me on this session. Today we do have the non-farm payroll, non-farm employment change numbers to be released. Looking forward to that. It might be quite an interesting move. Potential for quite an interesting move today with the non-farm employment change to be released. I'll tell you more about that shortly. And if you have any questions at any point in time, please feel free to put it into the chat and let me know. All right, Neymar said not as expected, but glad I closed my trade way earlier before the news. 25 pips profit, very nice. Neymar did sell it. I remember you did sell it earlier on the euro to the downside, so glad you closed out on that before the news, because it would have spiked up. I believe it would have spiked up and hit your stop loss if you didn't. So very good that you closed out on that. No trade for Jimmy. Yeah, it was a little bit disappointing from yesterday. It came so close to triggering. Lucky it didn't, because it would have hit a stop loss, but it came, as we waited for that. I think it was a bit of a priced in scenario. I'll tell you about that when we look at the news and the charts, okay? So with all that said, a quick disclaimer: any information contained on this webinar should not be construed as advice and is presented as educational material only. The contents of this webinar are not intended to be a recommendation to trade a financial product. So please remember that your objectives, financial situation and needs has not been considered, and you should consider its appropriateness to your circumstances. Now, with that, take that away. Not that. Take that away. What happened since the last time we spoke? We did have at 8:15 p.m. yesterday the euro, the ECB, with their rates decision, taking rates down from a 4.5% to a 4.25%, a 25 basis point rate cut decision from the ECB, right? A rate cut of 25 basis points on the monetary policy statement. No, I would say no big surprise. Nothing really jumps out, right? Nothing really jumps out. You can see here, decided to lower the 3 interest rates by 25 basis points. Assessment of inflation outlook, although it's still a little bit higher, they've decided to tap on the brakes a little bit earlier. Inflation has fallen by more than 2.5 percentage points. Where was the one I was looking for? Right, it's still looking to return it to its 2% medium-term target. And then the APP and the PEPP are still, the APP portfolio is declining at a measured and predictable pace. That's what they talked about, I think, 1 or 2 meetings ago, or they were talking about 1 or 2 meetings ago. And then ultimately, the same line stands ready to adjust all of its instruments with the mandate to ensure that inflation returns to its 2% target over the medium term, right? So no, it wasn't really a hawkish, I wouldn't say it was a hawkish cut. I wouldn't say it's a hawkish cut. I would say that, you know, with the news when it was released at 8:15 and during the press conference at 8:45, there was no major move from the ECB. Right, I was watching it, I was listening to what President Lagarde was saying. She didn't say like anything too crazy. And if you look at it in terms of headlines, usually when it's a press conference, FOMC or previous ECB's press conference, we'll have a whole bunch of headlines. This time around, you know, the headliner there was that the ECB, wouldn't say ECB is moving in dialing back phase, right? We need to confirm more data. We know about that from yesterday. We were expecting that already. More restrictive in real terms than back in September. Nothing really big and earth changing or shattering or you know, no big massive changes here. And that's why with that news, when that news came out, what happened on the euro, all right, we expected this. I was expecting it to break that 1.0867 level, which is that 38.2 level, but it came right down before the news. I'll take that away because that didn't trigger, so it's easier to see. All right, it came right down before the news, almost like it was going to trigger. I thought it was a bit of a front running before the news was released, and then at 8, it sat there, 8:15, it popped up. Right, it found that support and it popped to the upside, and then during the press conference it was sitting there, just bounced around. Very odd. It was very odd that we didn't see that much movements from the ECB press conference relating to price, and then it just through the night slowly, or through the night for me, through the evening or afternoon for you guys, it just slowly sat there, no major moves, and then through this morning still sitting just below this resistance level of 1.09. All right, I like the round number. I would refer to the round number at 1.09 as a resistance area. So that's one reason why I thought, you know, with how it sat there and it popped from 1.0867 up to 1.09, not a very big move, just over a bit over 30 pips. It popped to the upside and then sat there again. In terms of the Bollinger, you see that it didn't even, it popped out slightly and then it came right back in again. So it didn't do that much, all right? And that led to, I think I put it into the, Discord group for you guys when it was released, that it looks like it was a bit of a priced in scenario, because markets were pretty much, I think for the last month, expecting, or a couple of weeks expecting the ECB to cut rates, and that's why we've been seeing it holding that upward move. It shot up, it's been holding the upward move, sitting in that consolidation for this since Tuesday, bouncing around this point, and then now still looking like it's pushing back up. So I think that it was a bit of a priced in scenario. That's why we saw it spike up, right? So that kind of made sense in terms of the news release and in terms of what happened on the euro. Then we had unemployment claims for the US. Again, this is a weekly number. Wasn't too, well, I didn't even focus on it because I was watching those two events. The unemployment claims for the US came out, it was 219, revised up to 221, expected 220, came out at 229. So unemployment claims climbed up slightly again, right? It climbed up slightly again. And if you look at this, unemployment claims up slightly. ADP, not a direct reference to the non-farm employment change, but ADP dropped a little bit to 152. And if you scroll back again to the JOLTS, job openings, it went down from 8.36 or 8.49, revised down to 8.36, down to 8.06, right? So it's all small little drops in terms of jobs openings and ADP and unemployment claims, which leads to what we have tonight. right, tonight for me at 8:30 p.m. we have the US non-farm employment change number to be released, right? Non-farm employment change, it was 175K, it's expected 182. You can see again, I'll scroll back, I'm scrolling around a lot, but you can see that this one they're expecting some better numbers, didn't happen. This ADP they were expecting a little small drop, but it dropped a lot more. And then for GeoLTS, it expected a small climb or a small drop from the revision. Where was it? Revision, but it dropped a lot more. So again, coming back to today, now this, what has happened over the past 3 data releases for the US employment numbers, I'm starting to think that maybe we could see a weaker number here for the non-farm employment change number data for the US tonight. What do you think? Put it into the chat, let me know. What do you think the number is going to be, or do you think it's going to be a stronger or weaker number? I'm actually thinking that it might, or it could very well be a weaker number. Weaker in the sense of, I'm thinking even below 170, maybe below 160K. What do you think? Below 160 or above 180? Neymar's got it straight away. Red 169. Anyone else? Right, I do think that it looks like it could be a red number. I'm thinking below 160. Jimmy agrees it could be a weaker. Right, unemployment rate I think is going to stay at 3.9, while average hourly earnings at 0.3 or 0.2. I don't think it's going to change too much. Right, and then also tonight we do have the Canadian employment change numbers to be released. A bit of a slowdown again expected in terms of employment change from 90.4 to 24.8, and unemployment rate climbing slightly from 6.1 to 6.2. Neymar thinks that we're going to get unemployment up to 4%. I wouldn't be that pessimistic. I wouldn't rule it out, but I wouldn't be that pessimistic about that unemployment rate could get to 4. I don't think 4.1, at the most 4 or the worst 4, but I would probably be looking at that non-farm employment change number to be weaker. Again, when it comes to non-farm, it's really the roll of the dice. It's as good as rolling a dice. We don't know what the number, it could surprise us with another 300. Don't think it's going to happen, but it could surprise us. But you know, anticipation is possibly for a weaker number this time round. Right, we're headed in May, where it went from 315 down to 175, and on the May 3rd, if you looked at it, where was it? There we go. On May 3rd, when we had 315 down to 175, it went from 105.17 down to 104.53, but then bounced right back up again. Right, I'm kind of expecting a similar move, and this you see that it was shot down because of the data, went right outside of the Bollinger and then came right back in again, right, and swung back up. So I'm expecting a similar move. I'm expecting a similar data and resulting in a similar move on the dollar index. So what that means is, now looking at the charts, well, we were looking at charts already, but what we mean by looking at charts from now, take that away, that didn't happen, right, is that as it sits along this 61.8 level that we have here, I'll take that away, right, as it sits along this 61.8 support level and this 104 round number support, so this whole area here is my support level, what we could see is that with the non-farm employment change number tonight, if it does come out weaker, right? Even if unemployment rate stays at 3.9 or goes up to 4 or 4.1, what I'm possibly thinking of is that we could see the dollar spike down and then maybe go back up again. Very similar to what we saw from last month, right? Spike down, get way outside of the Bollinger Band, so it might slowly move down now all the way to 830, spike down, be outside of the Bollinger Band, and then bounce back up at 103.60. 103.60 being that middle level here with those swing levels and right in the middle there. Okay, so looking at that possibility on the dollar index with the non-farm employment change number to be released. So I don't think that we're going to see that massive drop on the dollar. I mean, it could happen, but I don't think we're going to see that massive drop on the dollar down to the 103 level. I think it'll spike down on bad news, and because it's dropped that much over the week, this was where we were at the start of the week, because it would have dropped that much, I think that it will be bouncing right back up to that support / resistance level. Does that make sense? And does that align with your expectation or your analysis? Let me know. So what I mean by that is tonight on the 7th of June, we're looking at the dollar index could break support of 104 level, well, at 104 level on week NFP data, but could rebound. But if it stays above 103.60, could rebound back up. There we go. All right, so could break support level at 104. But if it stays below 103.6, stays above 103.60, it could rebound right back up, right? And I mean by that is we could see it come back down and bounce up again. NEMA sees a head and shoulder almost breaking the neckline. Yes, we talked about that one. Did we talk about this one before? Shoulder, head, shoulder, neckline there. So a shoulder, head, and shoulder, and if it breaks, we could see it come down. Okay, so but I'm thinking about that. I'm thinking of that move down, but then ultimately I think that we could see it bounce back up again after that, like that. It could go down to about 103.40. I think I'll change that to say 103.60 seems a bit too near. Maybe stays above 103.40, it could rebound back up. Okay, so what this means is that, right, with this kind of move, expecting such a move like that will be a bit of an alarm bell. It should act as a bit of an alarm bell for your trade setups tonight, right? Or the trade setups that we're looking at, because you know it could spike to dollar weakness. Am I still connected? Yes, yes, okay. Okay, yep, I'm still there, yeah. Okay, so we'll talk about, you know, the two approach. One is either to take a profit quickly, get in, get out, switch buyers quickly if required, or ultimately is miss that first move to the downside and then look for that rebound. Okay, so let's look at what it looks like on the other currency pairs. The Kiwi dollar, $23.6, holding. I don't need that. So that didn't trigger. Well, if you looked at that, it could have pushed down. This was after our session was there. So it didn't trigger, it bounced back up. We're looking for it to test lower. All right, I'll take that away for now. What I would be looking for, thanks for that name, I don't know why it disconnected all of a sudden. Right, what we're looking for is a move like that. Yeah, what's going on here? Okay, do that, do that. Right, what I'm looking for is a move of that dollar weakness first, pushing the Kiwi to the upside, and then, so I wouldn't be looking to do anything here, because if I were to trade this up, even if I looked at 6220, you know, this is only a 35 pip move to the upside, very similar to what I've been talking about for the whole week. I think that it will be very tempting as it spikes to the upside, potentially spiking to the upside. I will be looking for this to come right back down again. Let me see. Yeah, I would be looking for this to come right back down again. Then I will be looking to sell it down. Okay, then I'll be looking to sell it down on dollar strength, eventual dollar strength scenario. 6205, 20 pip stop loss at a max. Take profit, you can go down to that swing level, or even all the way down to 60, 70 pips to the downside, 65 to the downside at that 61.8 level, retracement level. Okay, so that's what I would be looking out for on the Kiwi. Still looking to sell it down, 6205, stop loss 20, take profit 65. This is on DXY strength scenario. Okay, so test, reject, come right back down. Then onto the Aussie, that didn't trigger, take that away. Aussie, I like that it's found that 61.8 as a good strong level, bouncing higher. This one, I would say that in the event, if we see it drop or it doesn't bounce back up and continue lower, then you look to trade it up. You look to continue trading it to the upside. I would say that there is a bit of waiting. I was going to say there is a bit of waiting to do, but it's at a very high level right now. It is at a very high level right now, which actually makes it even more likely that you look to sell it down. It's so funny that we look like we're so biased to the dollar to the upside. I think that if it breaks this point, if it breaks past this point, we'll see it come up to this level, and then it will be all in that resistance area where it could test and reject. Right, and this move up here, if it does push up, is only a 40 something pip move to the upside where it could reject from. So again, look for it to break past this point first, right? As it pushes up, look for it to test that resistance and then look to sell down again on dollar strength scenario. I'll look to sell down from 0.6705, stop loss 25, take profit right back down to the range, all right? Down to that 61.8 level would be about a 70 pip move to the downside. So wait for it, let it go up, test that resistance and break down the 0.6705, 25 to 70 to the downside. 6705, stop loss 25, take profit 70, was it 70? Yeah, 70 to the downside. Again, I would say that's based on dollar strength scenario, right? Dollar weakness first and then eventual dollar strength scenario. Then on to the US yen, right? We've been looking for that push to the upside. That did not happen. Take that away. It looks like that level has held. We highlighted that level on Wednesday, which has held quite strongly. That 61.8 level. In fact, I'll update this and look at that as an area. All right, we don't need this 50, so we look at that as an area that needs to break. That trend line is done. Hey Lingopedia, how are you doing? Hey Pips Apprentice, no worries. Okay, so that trend line is done. What you also notice here is that double top scenario, and it's broken that bottom here. So it's pushing to the downside. At this point now, you look at this sitting along that Bollinger is slightly outside. That's why the dot appeared. It's coming back in. I would say that what I'll look for here is for continual downside on the US yen if we see the dollar weaken further. It's going to be very choppy. I feel that it's going to be very choppy on the US yen because if the dollar weakens, then the euro, the pound, the Aussie, the Kiwi is all going to push up. Right, it's going to push up, and then that's going to drag the euro pound, the euro yen, the pound yen to the upside. So it's going to influence the US yen. But overall, I'm looking at it possibly breaking to the downside here on the US yen. But at this point, it looks like an entry is going to be tricky. Right, if it breaks below this previous low at 154.60 and you look to get in, that's a 70 pip move to the downside. That's 25 that way, but it could get to exhaustion. It could be a long while. It could be a bit long to get to that point. So with that, what I'm actually thinking is that if it gets past, it's broken 61.8. I'm looking for it to retest a little bit. Looking for it to retest. I would actually think that if you have that risk appetite, you know, you could be looking at this a bit earlier. You'd have a 35 pip stop loss, you'd have a 50 pip 55 take profit, or you could even go down to 130 to the downside. Right, so that's what, if you have that risk appetite, that's what I'll be looking at for the US yen. If not, then I would say a little bit more conservative, 154.50. 154.50, stop loss at 25, take profit at 70 to the downside. And then for now, within this period, you could be looking at a short-term scalping kind of trade. All right, Neymar says could make a double bottom and bounce from 154. Yeah, So it could also do that and bounce back up. Not ruling that out with a double bottom. That's on dollar strength scenario as well. Right, that's on a dollar strength scenario. There you do have that two opportunities here. That one I'll be looking at 154.90. Stop loss, no. I'll be looking at about 154.80, stop loss 30, take profit way back up, 150 to the upside. Can take it a little bit longer for that. So there is both that option here on the dollar yen, either to break the previous low and swing down. With what we're expecting here on the dollar, it looks like it's going to come down and bounce back up. There are options for the US yen for tonight. Which do I prefer? I would like to trade it down and buy it off this support, to be very frank. I think that we could see that. So I'm actually going to be highlighting that move first. All right, 154.50. I'll be looking to sell down at 154.50, stop loss 25, take profit 70. 25, take profit 70 to the downside. Right? Why I think that is because I'm already seeing it pushing down right now, so I'm looking for that move to continue. That's only about a it's a 55 pip move further, and then a continuation down before a possible bounce back up. On the 3rd of May, what happened on the US yen was that, where are we? 3rd of May. 3rd of May at that point. Right, so the US, although we looked at the US dollar, the dollar index on the 3rd of May bouncing off, what we saw at that point was here. Right, it spiked down and pushed right back up again. Right, it spiked down from 153.22 down to 151.90 before pushing back up, and it was dropping before the news. Quite similar to what we're looking at now, looking at it drop and then maybe bounce from this point. So you could either look to buy up from here. So I like this kind of trades, I like this kind of setups. I'm looking to sell it down, then close out, then buy it back up. Usually only happens on the US yen. You can look to do that bounce off for a 30 pip stop and then way back up again that way. Okay, so a lot of opportunities there on the US yen. Then onto the pound dollar, not moving at all. It's just been sitting in that consolidation. That 50% is still holding. I would go for this in the event that we see the dollar weaken massively. Right, it doesn't bounce back, it goes all the way down. Maybe we see terrible numbers, maybe we see unemployment rate climb, maybe we see just generally terrible numbers for the US employment numbers data, then I would look to buy it up. This is just on a dollar weakness scenario, 1.2830, 55 pip move to the upside, stop loss can be quite tight at about 20 pips. All I'm looking at is it sits there for now, and then on release of the news, it spikes up that way. All right, spikes up that way towards that previous high there. So this one I would look to trade it up if possible, breaking above the resistance to the upside, 1.2830, 20 to 55. This is on dollar weakness. We're looking to buy at 1.2830, stop loss 20 take profit 55. This is on DXY weakness. Oops, yep. It's sitting right there now. It's sitting right there now, hesitating a little bit. Waiting to try and think about, is considering whether to break that neckline or not. Okay, then very similarly on the euro, take that away. All right, we got that trend line which we have revised. We can revise that trend line. I like how it's forming a bit of a pin bar at that resistance. I would like to see it consolidate in this area for now, right? Actually, just before we started the session, my thought process was that, you know, with that previous swing high there, dollar weakness, I would look to buy this up. I'll look to buy this up. But now looking at this, and we already have the pound dollar to the upside, I'm thinking that maybe even if we don't see that spike up and come right back down, right? Maybe we see it sit there and then it just goes right down, not just to the trend line, maybe further to the downside, because we were expecting it to, you know, spike down and push back up. What if it sits there? So I'm covering all scenarios here. What if it sits there and then pushes back up that way? Then I'm looking for it to sit there and then spike to the downside. I'll be looking to sell down 1.0880, stop loss 20, take profit, I'll go down to 40, and you can even actually look at that previous swing level at 70. All right, so I'll put that one there. So it looks like it could be a bit like the CAD, the US CAD trade. We looked at it 2 days ago. It spikes down past that trend line. Oops, what happened there? My line just disappeared. Hey, come back here. Oop. Okay, back. All right, it spikes down past that trend line, doesn't clear out, and then come right back in again, and then you can close out. So I would be looking for that on the euro, 1.0880. 1.0880, stop loss 20, take profit 70 to the downside. Oh, we have it there, right? But I think that we could very well see a hesitation at 1.0837, 1.0835. Hesitation at 1.0835. Okay. There we go. There we have it. Right. And then next up, we have the US Swiss franc pushing to the downside. Well, we're looking at this from yesterday. It came very close, it's bounced right back now. I would say that we'll still look at that 1.0880. We were joking about the 888s being a lucky number. It's holding there so far, right? So dollar weakness, you might see it spike down and then push back up maybe, right? So 30 to 70 to the downside. I'll keep that view at sell 1.088, no, 0.888, 0.88808, stop loss 30, take profit 70 to the downside. And then on to the US CAD, right? Again, we talked about this, that didn't trigger, neither did that. bouncing off this point. Remember, at this point, if you're looking at the US CAD, you have to remember that we're not just going to be focused on the non-farm employment change number, because we also do have the Canadians with their employment numbers to be released, and Canadian employment numbers doesn't look flash at all. It's looking to go from 6.1 to a 6.2. Employment change looking to go from a 90 to a 24.8. So it looks like it's going to be weaker numbers generally for the Canadian employment data, right? And we might see a bit of a mixed number here. So on the US CAD, what I would be thinking of the Canadian weakness, I'm thinking that this has formed a good strong base for it to push up. If it consolidates along this level, we could see it push up, right? We could see it push up, but we're expecting this. We would be ignoring the idea that we might see some weakness on the dollar, so it's going to bounce around. I think that it's going to do that and then push back up. All right. No, I think that the dollar weakness, some dollar weakness might push it back down. It's stuck in this range. What I would be looking for would be a bounce off this point, because this is only a 50 something 60 pip move to the downside. It will sit there. We could see it spike down, bounce off 1.3620, stop loss tight, no more than 20 pips, take profit way back up a good 90 pips to the upside. Okay, so I'm looking for this to basically sit there, spike down and push back up that way. We're still holding that trend line. So 1.3620, 20 to 90 to the upside. 1.3620, stop loss 20, take profit 90 to the upside. This is on CAD weakness, right? And dollar strength. Eventual dollar strength. This one is on dollar weakness overall. Okay. Then on to Lingopedia is asking about a pound Aussie. Where are we? Pound Aussie. Sitting there. We have a big resistance up here. Hey Kuno, I'm doing great. How are you? Long time no see. The middle section, we're right in the middle section now, actually. All right, and if you check this point, that's close to that 61.8 level. It's in between. It was broken 50, so 50 held for quite long. It's bouncing off 61.8. Right, so we are looking at that point there. We do have a bit of a mixed view, because the Aussie looking like it might test a bit higher and bounce back down. The pound dollar looking like we could push, is on the way, looking like it could push significantly to the upside. Then looking at the pound Aussie, maybe it could find a bit of a support here and push up towards that resistance. But if you look at this to buy it up, 30 pip stop loss, 60 pip take profit to the upside, or if it broke down, you'd be looking at a 20 pip stop, a 50 pip take. I think that you have a bit of a straddle there. on the pound Aussie. So I'll be looking at, you could think of a buy stop, sell stop order, where if it breaks, you get that triggered, you close out the bottom one, the order on the bottom one. Or if it breaks, you close out the order on the top one, because it's sitting right in the middle there. So that opportunity presents itself on the pound Aussie. And then, so I hope I answered your question there, Lingopedia. All right, and then on to gold. We were talking about this, I think, with Jimmy, where we're looking for it to bounce. We're looking at about 2350 to 2352. It bounced a little bit earlier at 2353 to the upside. I didn't get onto this. I was looking at the euro, so I missed this whole move. But now looking at this, holding that trend line, it does feel like, see, that's 50 there. So that's 50 there. All right, it does feel like it's setting up for a possible retrace, especially if the dollar does regain some strength. Right, so it does look at that. So I would say if it stays below 23.85, we could see it trade back down to, okay, don't need that. If it stays below 23.85, it could trade back down. Had a buy order 23.50. That's brilliant. Oh, so it wouldn't trigger. It didn't trigger your buy order. Okay, on gold, I would say that needs to stay below 23.85. Then I would say that it could trade down from 23.70 down to about this level here at 23.50 again. Could trade down from 23.70 to 23.50 on dollar strength. Okay, there we have it. A whole mix of varieties of setups that we're looking at. Right, we're looking at dollar strength, so it could have that dollar weakness first and then eventual dollar strength scenario. We'll look to sell the Kiwi, we'll look to sell the Aussie, or look to sell the Aussie, not N, right? We could look to sell the Euro if it doesn't spike down first. If it just goes straight up, then we could look to sell the Euro. If it breaks all the way to the downside, straight down, then we look to buy the pound up, or look to sell the US Swiss franc to the downside. I feel that the US yen and the US CAD has that opportunity, but it might be a little bit more tricky as it gets influenced by, on the US CAD is other news, the CAD news, and the US yen will be influenced by the other major currency pairs. All right, any further questions? Please remember that you can help me out by clicking on that thumbs up button. And also, if you are trading the non-farm, if you have any questions, reach out on Discord. I'll be there to help you guys. And then please trade well, trade safe, manage your risk, and have a fantastic weekend ahead. Take care now. Bye-bye.